Howdy there, folks, and welcome into today's video. I have a lot to show you guys in today's video. A lot of things and perspectives I want to share with you on kind of what's going on in the market out there, things I'm seeing, different viewpoints that maybe you haven't heard before and things like that. I appreciate you guys joining me. As always, thank you. And yeah, let's jump straight into this. So actually, first thing I want to start out here with is kind of talking to you guys a little bit about how commodities can potentially affect certain kinds of stocks, right? And so a good example of this is a stock I've been buying a lot of the last few months. Is a company named Oatly, right? And this stock has, gone up about 23% in the last few trading days. And a big part of that is not like the market's magically gone up a ton in the past few trading days or something like that. But if you look at the price of oats have gone down over 7%. So for a company like Oatly, their two main ingredients are water and oats, right? And so if there's a substantial difference in the price of oats, for instance, right, it's very good for Oatly's business model. And it's going to bring down costs. It's going to make their margins can be better in future quarters and things like that. And so you're going to see a lot of times many stocks, if they use a certain commodity and that commodity gets a lot more expensive, it's going to be bad for that business model, right? If it gets a lot cheaper, it's good for that business model. Remember lumber? Lumber went insane last year and the previous year, right? Really starting in like the back half of 2020. That hurt the home builders' profits. They would have actually been much more profitable, but they had to pay through the roof for lumber. Now lumber is dropping substantially, so that's a good thing for home builders. Unfortunately for home builders, though, I don't know if the buyers are going to be out there to buy the homes. So, you got kind of puts and takes with all these different things, obviously, in the market, right? WTI, so crude oil, is now down over 18% just in the past 4 weeks, which is a substantial move down in oil overall. And the reason oil keeps moving down, to be quite honest, is two reasons, right? The first is obviously a lot of speculation leaving the oil market. Commodities have been in this kind of epic bull run, and as with all bull runs, whether it's in the stock market, commodities market, bond market, anything, it's kind of like a blow off top, right? And when it comes to oil and commodities in general, you had this last kind of speculative wave of just like, money flooding out there like crazy, right? But the second reason is there's obviously more recession fears than there's really been, right? And so with all these different recession fears out there, a lot of folks are looking at this, and if there's a true recession, it's going to likely hurt demand for oil, right? And so if demand for oil is hurt, then obviously, that's not an ideal situation for oil price. That's ultimately oil coming down is a much better thing for the economy than high oil. I can tell you that much, because the amount of companies and things affected positively from oil is like this much. The things that are negatively affected from oil is like through the roof. Okay, and so this absolutely matters in a meaningful way. And if you look at like the oil and gas stocks, I mean, these stocks are all down huge again today. Just down. A lot of these stocks have moved down 25% to 40% from their highs they had reached literally just a few weeks ago. These stocks are down anywhere from 25 to 40%. And the reason being is, just like any other stocks in the stock market, sometimes people think the only stocks that can get bubblicious, right, or get like a FOMO period is like tech stocks, right, or super high growth. No, it happens in commoditized business models all the time. It happens in the oil and gas sector. Usually when oil and gas stocks are at, multi-year highs, that's when you got to run for the hills. And it's a hard thing to do because you see they're making so much money at that time. And you're like, look at oil price or gas price or whatever, right? And so it's very tempting to say, oh man, they're making so much money, I got to jump in these. And this is a lesson I learned a long time ago with I think it was a U.S. steel company, which is obviously a steel company, right? Steel's a commoditized business model. We all know that. Well, I looked at the financials of this company. It was absolutely amazing. It was like they were making money hand over fist. And the stock was even, a little bit down from the 52-week high. And so I was like, oh, man, the PE is so cheap. The forward PE is so cheap. The business model looks great. Little did I know, within a year, like the steel market was in a totally different place. And that company went from making money to losing money. Same exact thing can happen with oil and gas stocks, where, 1 year, they're making so much money, it's ridiculous, and their net income's off the charts. Next year, all of a sudden, they're losing money, and it's like, how did this happen? This happens in commoditized business models. And unfortunately, investors kind of get fooled into these things, usually when they're kind of at peak. And, if you're looking at the financials, it looks great, right? But there's always more to the story than just looking at the financials. And I think that's, something that all of us, as we've, gotten to become more experienced investors, we start to realize, man, that there's more than just a financial statement, because that revenue, that net income, it can change dramatically. We've seen it time and time again. Oil and gas stocks, home builders, steel companies, anything. It can change quite dramatically, right? Look at this, APA, which is old Apache company. This stock went from May 10th to June 7th. This stock went from, $36 or so to $51. I mean, just an absolutely massive move from right here to right there. I mean, that's just an epic move, but it's just investors getting FOMO, right? And the algorithm's also buying as, things are just moving up and moving up. And it's like, oil's going to the moon, everybody pile in, and now it's, now it's lower than what it was prior to that massive move up, right? It happens very, very, very quickly. And it happens with home builders as well. Look at Toll Brothers. From Toll Brothers from October 2021 through December 2021, they went from a stock that was $55 to near $75 in a matter of a couple months. And the reason was home building was obviously red hot, right? But the thing is everybody has to know this, okay? Home building only stays hot for so long. You maybe have 1 to 3 years of like a hot housing market, and then it slows down every single time. This is what we continually see. And all of a sudden the housing market will be cold for a while, right? Cold for a year, 2 years. If it's really bad, like 3 years, right? And then it's just, home builders are putting up horrible numbers. And then you go through kind of another bull cycle. And so this is, these sorts of stocks, they're almost more for trading, I feel like, than investing. And although there's some really good, home builders that run their companies well, unfortunately, those types of stocks, all these commoditized business models are better for trading than investing. It's just a flat out honest truth. And usually when you want to be buying those is when everything looks very bleak. When no one's buying homes, it's usually the time to buy home builders, actually, because those stocks usually have multi-year lows, 52-week lows, and you're likely going to flip that cycle, and then things are going to go good again. Oil and gas stocks. Last time you usually want to buy those is when they're at multi-year highs. You want to buy them when they're usually at multi-year lows, and everything looks horrible, and oil prices way down. Okay, and so always keep this in mind, especially if you're trying to play in anything that's a commoditized industry. Those can go through 6 to 24-month bull cycles. And then usually a massive bust cycle is featured on the other side. These aren't, this isn't Apple. This isn't like buying into Google. This isn't like buying into companies that have sustainable year after year after year growth. This is very different when you're dealing with commoditized business models. Okay, before we get into the rest of this video and the guts of this video, I want to make sure we shout out the partner of the channel, FTX US. You can get up to $100 in crypto by signing up with the link that is a pinned comment down there and using referral code Holy Smokers. FTX has among the cheapest fees. If you're looking at dollar cost average into the market, do recurring buys and not have to worry about it or anything like that, you can set up your account to do that. And I'm really excited because FTX has recently gotten into stocks, which I'm trying to get them to give me access to kind of their new stocks platform. I can't wait to try that and see what they do in that space. So I'm trying to get access to that, and as soon as I get access to that, I'm gonna try it out and buy some stocks with it and kind of show you guys what's going on there. So yeah, if you want to take advantage of that, also you can earn free crypto on every trade over $10. That will be first link in the description. Also have that as the pinned comment if you want to take advantage of that before it ends. Okay, I want to talk for a moment about some of the let's call them like the retail stocks. Some of these stocks that got really, really popular at the very end of 2020 and kind of the beginning of 2021. And there's an interesting dynamic that's going on in these stocks right now that I'm noticing playing out over the last few months. And I'm not going to show you AMC and GameStop because those are kind of their own like beasts in the retail community. These are the kind of the next level down under like the AMC, under the GameStop. They're kind of in their own like stratosphere. This is like the next layer of the retail stocks that were obviously hot at one period and then have gone icy cold, right? And are down 80-90%. But there's been something interesting happening recently, right? So Wish, I pulled up this was a popular retail stock for a bit there. It still honestly probably is. And a lot of people are hoping someday this is like a $5, $10 stock again, right? When it comes to Wish, look at this stock though. It hasn't really done anything since March, right? It hasn't continued to like move down even despite the market being in a really tough place since March. This stock just hasn't. It's kind of just floundered in $1 to $2 range. And it's very interesting, despite all the other market volatility and everything going on. And what happens is you start to lose any more sellers in a stock, right? Where just like everybody that wanted to possibly sell that stock in any meaningful way has already sold it at a point in time. Look at a stock like DraftKings, right? It's for several months now. This stock's kind of been in the, let's call it $11 to $15 range, right? DraftKings was one of those popular retail stocks. C3AI, this was very popular in the retail community for quite some time, right? And might still be fairly popular. This is a stock that, look at, it hasn't done anything in months. It hasn't really continued a massive downward trend. Obviously, it has no massive upward trend either. It's just kind of staying in that, let's call it, $16 to like $21 range and not really doing anything despite all the drama in the rest of the market. Look at this is a space of Virgin Galactic Holdings, right? Which was a very, very popular retail stock and might still be fairly popular. Obviously, the stock's down massively, but over the past several months, hasn't gone anywhere. It's been anywhere between about $5 and $7 for months now, right? For many, many months. So this is a very interesting kind of dynamic going on in the market. Look at HIM stock. Same thing. This has been almost this entire year. It's moved up, it's moved down, but honestly, it really hasn't gone anywhere for basically this entire year when it comes to HIM stock, a very popular retail stock, okay? And so there's an interesting thing I don't think we ever talk about enough when it comes to any sort of asset, especially maybe more speculative ones. At some point in time, you just run out of sellers of these things in any meaningful way. And, like everybody that wanted to sell this stock has already sold that stock. And so unless you get any type of major development in that company, like a bankruptcy or like, business is going much better than expected, you can't really get the stock to do anything. And it's just an interesting dynamic when you see a lot of other stocks during that same exact time frame go down massively, right? That are much bigger companies. But remember, all those small caps I just showed you, some of them were maybe a little bigger than smalls, but all those, let's call them retail stocks. Remember, those stocks peaked in like February of 2021. Okay, that was over a year and a half ago. And so all those stocks have been obviously dropping for like a year and a half now, right? And now it's just at the point in time where it's like, where are the sellers? And despite all the bad news, despite recession fears, despite inflation being so bad, those stocks, you can't get them down the last few months. And it's just, at some point in time, you just run out of sellers in those stocks. And they were the first to get hit, right? And, it'll be interesting to see if those are the first to come back. Sometimes that's how it ends up playing out, right? And I'm not talking about back to old pricing. I'm just talking about like a healthy upward rise, okay? Something that's interesting is going on in Coinbase. This is a stock that continues to pretty much just hit new low after new low after new low. I think when it comes to a stock like Coin, I think there's a few factors here, right? I think the first factor is everything going on with obviously the Voyager situation, Celsius, BlockFi, and all that drama, right? And all those brokerages, exchanges that have either gone under or on the verge of going under, right? With all of that going on, right? I think a lot of people are very scared to buy coin stock. And, I can kind of understand it, but the biggest difference I would say between Coin and, all these other brokerages or exchanges that have failed or are failing currently is, Coin has like $6 billion of cash. None of those other ones had even remotely close to that sort of money around. So in order to take a Coin down, they would have had to do something so speculative that it would create like, a $10 billion loss or some enormous number. That's just insane, right? And you never know with the way some of these companies have conducted their business, you never know, right? I mean, all things are possible at this point in time. But just understand like how epic of a loss it would have to be to take down something like a Coin, right? It'd have to be like absolutely insane. But I think that's actually the smaller factor, okay? I think, honestly, what the market is looking at with Coin and what they're scared of, and I want to explain this properly, okay, because I don't think anybody ever talks about this. So the NASDAQ went through a phase in obviously the late 90s that I'm sure a lot of you guys know was a phase in which everybody got really, really hyped about the internet and how the internet was going to change the future. And, oh my gosh, this is so exciting. And everybody bought all these internet stocks. Wall Street did, retail did, everybody did, right? Oh my gosh, internet's going to change the game, right? Well, everybody got too excited too fast because the internet was going to change the game, but it was going to take a lot longer than a lot of people had anticipated. And so everybody got so excited, But really, they should have been getting excited more like a decade after that, essentially. Like, that was the time. Like, when the smartphone launched, that was the biggest game change to the internet. When high-speed internet came, that was to the masses, right? In kind of like the mid-2000s, that was a big game change for the internet. When, obviously, 4G came out, that was a huge change for the internet, because so suddenly on your smartphone you could have pretty fast internet, and like that was a game changer, right? So everybody was right about the internet being this big thing in the future, but they just got too excited too fast, okay? And so what this ended up leading to was a situation where the NASDAQ downtrended for several years, okay? It downtrended, starting in 2000 all the way through 2002. And then it took 14 years to get back to where it used to be, a new all-time high, right? 14 years. And so a lot of people look at the crypto space, right, and think about something like Bitcoin. And they're like, who's not to say that Bitcoin won't go through something similar, right? Because what we've seen is a lot of people obviously be very, very excited about the crypto and how crypto is going to change the future and, be this huge thing. And I think a lot of folks are probably going to be right about that. I think crypto can be a massive, massive game changer for the way so many things are done in the future, and for the better, right? But the fact is, that's not happening today. If Bitcoin, I tell people this all the time, if Bitcoin, was gone tomorrow, if Ethereum's gone tomorrow, it sucks, but it's not like the end of the world, right? The world's going to go on. It's going to be just fine. Investors lose money, all those sorts of things. And so that's kind of the stage we're at right now. In 10 years, maybe everybody's using Bitcoin, right? Or it's this massive thing, or it's, as big as gold in terms of not just investment use, but actual real use, right? Or maybe Ethereum is like the Amazon, right? Or Ethereum is like, if you could get a piece of the entire internet. These are definitely real possibilities. But the other real possibility is these things take time. And in order to become big in the real world, it's going to take time. And so, unfortunately, it's not out of the realm of possibility that Bitcoin could go through a similar phase. And maybe it doesn't happen. Maybe it's a year or two from now and Bitcoin's back at all-time highs. Maybe it is. Or maybe we're on a long downtrend where Bitcoin downtrends for, let's say another year or two. Then it starts to come back, but ultimately it never gets back to 60, 70K, its old highs, for a decade plus. It's not out of the realm of possibility. I think that's just very important for everybody to remember, because there's so many similarities between what happened in the tech bubble and what's happened in the crypto, where people just get extraordinarily excited very, very early on when, it hasn't done much in the real world at that particular time, okay? Travel. These sorts of stocks are interesting. The entire travel, this is my travel watch list here. These stocks all moved down again today. All the travel stocks have just been in a very, very tough place for a while now, right? And when it comes to travel, there's something big happening here that I don't think a lot of people even realize. Obviously, these travel stocks have been moving down because of fears of recession and oil price, right? But oil price has been going down. A lot of these travel stocks are still pretty darn close to their 52-week lows or multi-year lows, right? And everybody's thinking about recession. So some people are like, I don't want to own a travel stock if we're going into recession, because who's going to be cruising and going to the hotels and flying around and things like that, okay? Respect, I understand that. But I think there's something bigger going on for Wall Street, why they don't want to hold these stocks. And even with the algorithms and what's going on in trading activity, okay? Here's the thing. This is out of LA Times today. Shanghai and Beijing order a new round of mass Rona testing, right? The fact is, we still have not moved off of Rona. Rona is still a thing that's out there. It's still a thing that's being talked about. And we haven't moved past it fully yet, right? And so until you fully move past that, a lot of folks still don't want to own the travel space, because they're like, what if some new, variant comes out for the Rona, and all of a sudden, the hotel, and people look at that and they're like, that could be the, the nail in the coffin for a lot of these travel companies, where they're done. They're going to zero at that point in time. That's the way that some of these folks view it. But I think it's even bigger than that, okay? I think it's actually much, much bigger than that. Because here's the thing. It's been estimated that anywhere between 60%, 80% of trading is algorithmic now at this point in time, right? And here's the thing, okay? If machines are doing trading, sometimes they are doing it based upon technicals that are being hit or not being hit, right? Sometimes they're doing it based upon headlines. And, the machine's kind of reading this headline, and so therefore it says sell these stocks, buy these stocks, things like that, right? And so if the machines are reading headlines coming out left and right about Rona. What's the algorithm going to say? Sell travel stocks, sell travel stocks. And that's exactly what happens, right? And so this is just an important thing to remember is much of the market is not controlled by you and not me and the hedge fund manager even going in and placing a trade. It's done by the machines. And they could be trading off stuff that, we're not even looking at or paying attention to, or things that we don't think is a big deal, but they think it's a big deal. The machines think it's a big deal. They're programmed to think certain ways, right? And to do things certain ways. And so, hey, we see this, sell this stock. We see this, buy this stock, okay? And, it's kind of a frustrating thing in the market, but it creates some extraordinary opportunities in the market, to be quite honest. Because without the machines, without all the algorithm trading that goes on out there, we wouldn't get nearly as big a sell-offs in stocks. We also wouldn't get nearly as big of moves to the upside in stocks. And I think the reason we get such drastic moves nowadays is a lot in part because of the machines. So, to be honest, we make more money and lose more money because of the machines, right? And you get better buying opportunities because, they see a headline that says this and they're like, sell, 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 sell. It's just the way it is, right? The banking sector continues to hit new lows after new lows after new lows after new lows. And it's just interesting because it seems like despite, it doesn't matter what happens in the market right now, green days, red days, it doesn't matter. It seems like these stocks just can't get out of their own way. JP Morgan's a stock that it seems like literally every single day it hits a new 52-week low and new 52-week low and new, 2022 low. And at some point in time, it's like, are these stocks going to get down to levels where they're at multi-year lows? Is that what we're going to be talking about now? But banking is just a cold as mold space. And there's obviously going to be opportunities here, but it's just, they can't get out of their own way. This is extraordinary. Disney's a stock I hardly ever look at. And I want to show you guys this, okay? And what you're looking at is a 5-year chart for Disney, okay? And I think if I ask anybody, like, how's Disney stock done the past 5 years? Is it up or down? I think almost literally every single person, unless they already know the answer, they'd say it's up, right? Because it's flipping flapjack in Disney. And it's over a 5-year span. Like, of course it's going to be up. This stock is down 7% in the past 5 years, okay? In the past 5 years. And the drop recently has been incredible. From the 2021 highs of around close to $200 a share to now the stock's under $100, that's nothing short of extraordinarily horrible, okay? And so I look at a stock like Disney, I'm like, man, maybe there's an opportunity here as like a div play, right? And I just think, it shows you that there's so many opportunities in this market right now. It's hard to even know where to start, right? I've been talking about smalls and mids are trading historically the cheapest they've traded at in honestly like a decade plus, right? You're looking at a ton of the big tech stocks that have been absolutely decimated, 40%, 50%, 60%, 70% that are trading at multi-year lows now at this point in time. You look at something like a Disney, the stock is trading lower today than it was 5 years ago. And so, there's just a lot of opportunities in this market, but unfortunately, it's, you can't take advantage of them all. And I think that's the most frustrating thing is you see all these deals left and right. You can't take advantage of them all. You're only going to be able to snag a few, right? And so that's the hard part is trying to figure out like where's the best risk reward in the market right now, given kind of what's going on. And what the Fed's doing secretly, honestly, and I've talked, with friends about this and whatnot, is they're trying to kill the wealth effect. And this is essentially what they're trying to do while trying not to kill the economy as much, but obviously it hurts the economy. So, the wealth effect is essentially, your wealth goes up, my wealth goes up, everybody's wealth goes up because we own stocks or crypto or real estate or whatever, right? And we feel good and we feel richer and we literally are richer, right? So we have increased confidence. We're willing to spend more money, right? We're making more money. We're taking those profits. We're either reinvesting into more stocks or cryptos or homes, or we're taking in and spending the money, right? And so the wealth effect is absolutely phenomenal thing for the economy. And the fact that real estate goes up over time, the fact that stocks go up over time, the fact that crypto goes up over time, at least from what we've seen throughout history, is a good thing because it makes people richer. It makes people spend more money, right? But the issue with this is when you're destroying the wealth effect, guess what? none of us are as rich, so we can't go spend the money we were spending before. Now, this is exactly what the Fed's trying to do right now, because they don't want people really spending money right now. They're trying to get inflation down. So they don't want me going to buy another house right now and building another house. They don't want me going to buy another car right now. They don't want any of that, right? They don't want me to go buy another iPhone, another this, and another that, right? Because it just kind of gets into the spiral of inflation. And so, if I think about my own situation, I've lost, about $3 million to $4 million of my wealth has been wiped out since the 2021 highs, right? So I'm essentially $3 to $4 million less wealthy, or whatever you want to call it, right? And look at me. I'm not going out there to buy a new house right now. I'm not going out there to buy a new car right now, or spend on any big purchase for that matter. I don't feel as wealthy. And I'm not factually as wealthy. And so therefore, I'm not going to go spend like crazy, right? I'm going to go ride my wagon around. Okay, I'm just kidding. Okay, maybe not the wagon, but in all seriousness, that's what happens. And so in almost everybody's wealth effect has been destroyed. Now, if we get real estate to start coming down in a meaningful way, then the wealth effect from real estate starts to be destroyed, right? Which takes another leg out. And so therefore, this is what the Fed's really trying to accomplish while trying to keep unemployment as low as possible. I see some worrisome signs. I go into Best Buy yesterday, right? Going to Best Buy. And no one's talked to me in Best Buy for years. I walk in the store, and in a matter of, I was in there for 5 to 7 minutes. I had at least 4 different workers come up to me and ask me if I needed help with anything, because they were like dead. And I'm guessing they're probably getting management's probably coming down and saying, hey guys, we're not hitting numbers. We need to help out customers. Make sure you're talking with your customers and seeing if they need any help and things like that. And so it's just extraordinary to kind of see that and playing out in real time, right? And there was a company that just didn't really need to. When all the stimulus money was out there, when everybody was forced to be home, people were spending on electronics left and right. And now you walk into a lot of these stores and they're ghost towns, and the employees are asking you left and right, hey, you need help with anything? Can I help you find anything? And it's oh geez, man, can I just walk around the store without being bombarded with 7 people asking me if I need help with anything? But that's a moment in time we're in, right? And so the Fed's knocking off that. They're not knocking it off. They've knocked off the wealth effect. And the next part to see, and this is going to be interesting to see, is can they engineer a situation where, they killed the wealth effect, they brought down the economy, they brought down the inflation, but they didn't increase unemployment in any meaningful way. That's going to be the interesting part. We're going to have the answer to that over the next 6 months. I can promise you that. And we'll see how things kind of shake out there, guys. So anyways, much love as always. I appreciate you guys joining me. Make sure you get that deal from FTX if you're looking to take advantage of that. That will be pinned comment down there. Don't forget to use referral code Holy Smokas. Don't forget to subscribe, smash, and have a great day.